the resentment of work comes from the feeling that it is both necessary and yet somehow pointless. Labor is almost by definition the furthest from the money printer. They are trapped in only ever selling their labor. I'm imagining there's like a Marxist here. The key thing that I would disagree with them about is from 1971 onwards, almost every industry increasingly has some element of financialization, and that massively dictates what kind of jobs there are. This actually affects everything. It doesn't just affect housing.
Let's say we're on a Bitcoin standard. Explain to me how you would imagine the unwinding of what we've been through since 1971.
Basically what happens is,
how does a barista get paid more under a Bitcoin standard than they do now?
the far more important part is that they can choose to become capitalists and actually even choose to become labor for basically the same reason, right? They will afford the barista or whoever the worker is to have a much healthier attitude about work. The ultimate promise of Bitcoin is Archie.
Alan Farrington, welcome.
Bitcoin Archive.
Yeah.
Thank you. I don't know if I'm allowed to dox you or not. So that
Yeah,
I'll
I'm
call
Archie.
you Archive.
People know. Yeah, people know I'm Archie, so it's fine. You've done a lot more of these than I have, actually. Probably.
Maybe.
We've done about.
I've done a
I
fair
think we're
few.
up to about 30 interviews now.
30.
Yeah,
You might have overtaken me. I don't think I've done quite that many.
but you've been around in Bitcoin for quite a long time.
Yeah, it depends how you define it. I mean, I've been relatively public for, let's say, 5 years now, and was kind of happily private for a while before that, while I was still in my TradFi job and terrified of compliance. But yeah.
What was your background in TradFi?
I worked for an asset management company. So in layman's terms, I guess, without all the finance jargon, my job was to decide whether companies were good investments or not, which is still my job. It's just it's more fun now.
As an analyst then?
As an analyst, and then working up to portfolio manager.
Okay. And when you first came across Bitcoin, so you've got quite a traditional mindset in terms of analyzing investment propositions, and presumably you've got, I don't know whether or not you've got the traditional finance education or miseducation, should we say, as well? Because I felt like I was miseducated, given what I know now. But did you have a financial background before you embarked on that?
Oh, so okay, there's two really interesting threads here. So one, I discovered Bitcoin before this job. So I discovered Bitcoin when I was still a student. And we can go into that story if you want. I think that, well, the other point, which is you'll maybe find more interesting, is relatable to your experience, is the company that I worked for, and even more broadly, the financial education I got, if you like. This is what you're probing at, what you're obviously interested in. Was very, very outside of the mainstream, in a way that I think lent itself to me understanding Bitcoin better. I don't know how far down this rabbit hole you want to go. I mean, I've talked about this a little bit publicly before.
Yeah, go into it.
For what it's worth, I have enormous respect still for my former employer, so I'm very happy to shill them a little bit. But their whole attitude to investing, to be clear, not to Bitcoin. I don't think they have an attitude on Bitcoin, but their attitude to investing, their attitude to the purpose of capital markets and financial intermediation aligns with Bitcoin very strongly, whether they intend to or not. And I've put a lot of thought into why that's the case, like why there is such an obvious overlap that, for what it's worth, a lot of my former colleagues and friends as well appreciate and have come to appreciate more even since I left. And I think what it comes down to is that they're very focused on first principles thinking, right? They're very suspicious of, I guess you could say, groupthink, more kind of like almost memes in a way. Like, you know, you wouldn't call it that in TradFi, but you're obviously familiar with this from Bitcoin Twitter, I guess, like waves of hype, right?
The herd mentality.
Yeah, the herd mentality that don't necessarily have any grounding in any kind of fundamental analysis, or even if they do, are still to be, you should still be wary of them, because your whole purpose as an investment manager is to differentiate yourself from your peers. If you're doing the exact same thing as them, then you're not adding any value for your clients.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security. backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling, just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money.
So my former employer took that very seriously. It led to a few other things that maybe are a bit more specific, a bit more tangible than just, first principles thinking, but which also have very strong overlap with Bitcoin. So for example, being extremely long-termist in outlook. So their investment time horizon, self-declared, right? It's not like something that you can measure it after the fact, I guess. But I can say from the inside that I know they take this very seriously. It's not just like a marketing line. Their investment time horizon is significantly longer than any of their obvious peers, depending on which strategy exactly, because it's not just like a single entity. There's different kind of sub entities operating within it, but it would be anywhere from 5 years, I think at the shortest, to 10 years plus for some of the even longer term oriented strategies. And that's as opposed to the norm of months, like literally quarters, like taking quarterly news flow extremely seriously and obsessing over it and, adjusting your positions based on what's come out. If anything, they went kind of amusingly in the other direction of kind of being proud of ignoring that kind of thing and really focusing on, as I mentioned, on first principles thinking, on thinking about wanting to invest in things not because of hype, not because of momentum, not because of more kind of jargony ideas of like relative overweighting and underweighting and that kind of thing, and sector exposure and whatever. They're primarily concerned with what is going to be dramatically different in 10 years and who is going to have profited from that. So with that, with that kind of background, you can maybe one more thing I'll mention is you can imagine if that's what you're setting out to do, you're going to end up being very predisposed to, again, back in the jargon, being overweight tech, right? Which is, this is something that they're often described as, and they hate it because it's kind of beside the point, right? They don't set out to be tech investors. They set out to invest in the companies that are going to be the most dramatically transformative over a very long period. So it's kind of obvious you're going to be at least looking more at what gets called technology than anything else. But that also, I think, pretty obviously aligns very nicely with Bitcoin. And so back to your original question, I already knew about Bitcoin when I joined there, and it took a while, I think a decent couple of years, just given I didn't have any background in finance, to internalize all of these concepts. But I do actually think that it ended up benefiting my understanding of Bitcoin in a small way, because, it's kind of it's a meme in and of itself that Bitcoin touches on a million different areas, right? Like no one's an expert in all that kind of thing. But this philosophy and operating in that environment professionally was really valuable for me, appreciating basically how this is really more of like an anti-fiat point, I guess, than a Bitcoin point, how broken fiat capital markets are and how that obviously derives from the dysfunction of fiat itself. And so, that's useful. That's it's not something I guess every Bitcoiner needs to have thought too hard about, but given it was my job, I couldn't avoid thinking about it, and it made me like Bitcoin even more.
I really like that. One of the things that pops up into my mind about having such a long-term view with investments is, how do you manage the risk of a long-term horizon, investment horizon, because there could be an accumulation of risk factors, but because you have such a long-term view of how things perhaps will turn out, your patience allows those risks to continue building up. So how do you scale into a position with such a long-term investment horizon, and how do you manage the risk that actually maybe you're wrong 3, 4, 5 years?
Well, that has to, there's a few other things I can say that are a bit subtler, but that has to be addressed up front, that you're going to be wrong more than you're right. Like you have to just internalize that. It leads to, this is maybe one of the broader points it's worth touching on. A lot of this is behavioral, in that you need to understand before you set out on the, at least 10-year journey, what is likely to happen at kind of an aggregate level. You obviously don't know what's going to happen with the individual investments. If you did, then you'd be the best investor ever. But if you're taking this approach, it's overwhelmingly likely that, as I said, you'll be wrong more often than you're right, that a lot of what you do will literally go to zero, and that will feel terrible and you'll look like an idiot. But that the approach is justified overall, because when you win so big that it more than makes up for your losses. So there's a behavioral component in that, that's nice after the fact, 10 years into it, however much you're outperforming if you've done this well. And even there, like it's important to say, you obviously can't guarantee that just by adopting this approach. You still need to be good at the job of investing, right? You still need to be rigorous in your analysis. But that itself isn't enough either, I don't think. And so what really relevant and that I admired and still do admire so much about my former employer is creating an environment where that kind of behavioral, the behavioral characteristics that are needed to do this well are encouraged and rewarded, and basically in kind of every conceivable way that a lot of which is cultural, frankly, rather than, just directly connected to like rewarding investment performance. And people are encouraged to take this attitude seriously, right? Like not just pretend to and like kind of say the lines and have it be a marketing thing, but not have it be something that you're actually enacting. So there's a lot of, there's a huge cultural and behavioral component in taking seriously how this is likely to unfold. So that's one point. And I think the other one, which is maybe a bit simpler to communicate, is just honesty and transparency with the clients, because the trade-off from their point of view, keeping in mind this is all public equities, right? So what I do now, I'm sure we'll get onto this, but what I do now is very early stage venture, so it doesn't have this profile at all. In public equities, everything is liquid, everything's marked to market every minute, basically. I mean, for legal reasons, it's marked to market every day, but there will be massive volatility if you adopt this approach. And that's just an unavoidable consequence of taking seriously, how you're setting out to do it, and rather than it just being kind of marketing. And so that's actually maybe a good way of putting it, that you want the marketing to be accurate. You don't want it to just be something that gets people in the door and then they're not happy when inevitably there is not even a bad spell necessarily, but conceivably just a more volatile spell than otherwise. So a lot of it is really just about managing the expectations of clients, and they were pretty good at that too. I think I remember it wasn't my department effectively. I was involved in investment analysis, but the people who were handling the client relationships, who we would obviously interact with pretty often, they would reinforce that in the good times, you have to constantly be telling clients it won't be like this forever, right? There will be bad periods as well, and we're operating over 10 years because it's very easy to buy into all of this in theory and understand intellectually why quarters don't matter but decades do. But when you're in a horrific quarter, like if you don't have, back to the very first point I mentioned, if you don't have all the behavioral checks in place, then it's also easy to just forget this and panic.
So going back to my question, how do you scale into a position? Do you just go all in at conviction, or are you looking at certain thresholds to be met? Let's say you've got, there's some kind of AI play that you're interested in, and you think this is going to
AI.
Yeah, this is going to play out over the next 10 years. Mm-hmm. Like going all in now because of your conviction and your thesis and your research seems like a very risky thing to do. But how do you scale into a conviction on a play?
There's different attitudes about this. There's different approaches. I don't think there's really a right answer. I think if anything, it probably also follows on from what you're happy with behaviorally, because on the one, I can come up with completely different arguments that don't contradict. I mean, they contradict each other in terms of the prescription of what to do, but they follow from having a different attitude about how you should do it. And so I don't think they contradict each other in that sense. So given that, I didn't mention this before, but another part of this investment approach is having really quite concentrated portfolios. There's no such thing as concentration in the absolute, but certainly, again, relative to the competition. So relative to the competition, much, much longer time horizon, much, much more concentrated portfolios. And so one consequence of that is that you are behaviorally nudged to have much larger positions than the competition, then maybe feels comfortable or whatever, because it's just kind of pointless otherwise. I mean, I can come up with just a toy example, I guess. If your portfolio is only 15 or 20 companies, let's say 20, the math is easier, 20 companies, let's say, which is tiny for, public market equities. The average position, let's say, is 5%, which is also therefore very large, but things will have moved around. So you probably have some that are up to 10. If you take a new position, you're going to have your 21st company, and it's like 50 bips or something, which would be normal in the case of the competition. It's just kind of pointless. Like, it doesn't really do anything. So you're motivated by the overall investment philosophy and portfolio construction philosophy to, yes, have far, far bigger positions. The counter to that, though, is that there's an interesting overlap with Bitcoin here too. I think in Bitcoin, this is much, much more extreme. This whole idea of like, you need to own it to really get it. Right. So that applies in Bitcoin for reasons that don't really translate here, because they're almost more kind of technological and physical in a way. But I think the behavioral component is very similar. And so the argument against, you just go all in right at the start is you take a small position as a way of encouraging you to learn more. But that's tricky because you can't really push that too far. If you do push that too far, you get away from the goal of having a concentrated portfolio in the first place, because you can be like a little bit interested in everything, and then before you know it, you actually have 100 positions, and you're just like learning about it. You're kind of just kidding yourself at that point. That's an easy trap to fall into, in terms of you've given the marketing spiel of super long term and super concentrated, and then behaviorally you're just not up to doing that.
There's two reasons why I asked it. I've heard a lot of people liken investment to, I guess, various forms of poker, where as you get more and more information revealed in the hand, you're able to either increase your confidence in your play.
I dislike that analogy. I'm very familiar with it. I can tell you why I hate it so much. It's not. There are obviously some similarities. The key dissimilarity that I think breaks the logic is that there's no entrepreneurship in poker, right? Poker is deterministic. And there's, not to go off in too much of a tangent about poker specifically, but there's creativity in poker. There's a human element to it, in terms of you're not playing against a computer, you're playing against a human opponent. But it is completely deterministic. Investing is, I don't mean for this to be too sort of philosophical, but I think in this context, this is a helpful way of describing it. It's essentially entrepreneurial, but one step removed from the actual entrepreneurship. It's kind of, I don't know if it's helpful to think of it as like meta entrepreneurship or something, but as an investor, you are allocating capital, but one step removed from the ultimate allocation of the capital. So what you're looking for in who you're, quote unquote, investing in is their skill in capital allocation. And so your skill is, are you good at identifying good capital allocators? And that, again, apologies that there's quite a lot of financial jargon in there, but entrepreneurship is unavoidable in understanding this process, right? You're not giving people money because you think they're good, like poker players, basically. That would be an interesting way of comparing it. You're not saying, oh, you're good at gambling, so I'm going to bet on you. It's far more, I guess, in kind of a mathematical sense, it's completely unpredictable. It's clearly not deterministic. It's not even really random either, though. It's unavoidably kind of human, right? there's, you can talk about it in this layer of abstraction with all the financial jargon and all the kind of mathematical tools to explain the financial jargon, but ultimately it's a completely human endeavor. And I guess any entrepreneur, any real entrepreneur knows this, right? If anything, this is part of my frustration with fiat finance, going right back to me saying that this is instilling a helpful cynicism about fiat finance was a very valuable experience. It made me appreciate Bitcoin more. I think the key to why I have that cynicism is that it encourages you to see everything mathematically and to treat everything as if it's just numbers, as opposed to, no, this is actual people making decisions about what to make and how to sell it. And, you can treat it just in terms of aggregates of data, but if you do so, you're unavoidably failing to understand it on a pretty key level.
The analogy, I'm sure, breaks down on a number of variables, but I guess the key point I was making that analogy was on the uncertainty to the player, and also your confidence building as you get more information to make a decision one way or the other, and likening that to investment.
Yeah, that part is
with respect to scaling in and out.
Yeah, that part is similar. I think the reason you have to be careful though does follow from the previous comment, in that the kinds of information you're getting are very different. So in poker, you're effectively updating your priors on what's even the right way of putting it? I guess deterministic. I'll just say deterministic again. On real probabilities, basically, right? This is sound mathematical information on which you're making decisions, and the danger. I think the behavioral component is similar in terms of how confident you are and how much information you think you have. But the trick is that you shouldn't slip into thinking that this can be mathematically characterized. So it's almost like poker is a helpful analogy to think about kind of logical ways to do this. Like, what is a coherent approach to how you should think about position sizing, which ultimately does still have a mathematical component to it. But it's only an analogy. It's not literally the same thing,
it's not, yeah.
Which I know you understand, but you'd be surprised. I mean, maybe you remember this from your career too. You'd be surprised how many TradFi people don't recognize that it's an analogy. They think it's literally true.
Yeah. I take the lessons from a personal point of view and the things I had to unlearn, both as a result of my miseducation and my personal dispositions as well, which are perhaps the most painful lessons to understand. And the thing with me is I had to let go of, I fall in love with ideas. I'm a very high conviction person, big ego, all of that stuff.
You'd love this investing approach. That's what you need to get the courage to do. That's the whole point. That everybody veers towards the index, right? Everyone's like, I don't know, I'll just do a little bit and I'll see what happens. Like, no, you got to bet big.
Yeah, but I was very careless to risk management, and I felt like
you were #reckless.
I was very reckless, very reckless. I have a very high tolerance for pain and risk, unfortunately. So it's from a financial sense.
I can throw in some, this isn't like copyrighted material precisely, but I can throw in some taglines from my own jobs, that my old job, that I think you'll like, which is, what's the risk of not owning something? It's way higher than owning it. If this is your attitude, right? If you're setting out to have a concentrated portfolio that invests over the extremely long term, invests in real disruption and not just market movements, and at the end of the day massively outperforms, it's far bigger risk that you don't own something that achieves that.
Well, that was probably my biggest downfall, is I didn't have money that could be as patient as I needed it to be. Right. So I didn't have
which is why client communication matters, right? Especially if you're only in an intermediation, like if it's your own money, you can just do whatever you want, just 100% in Bitcoin and happy days, right? But if you're in an intermediation role, then obviously goes well beyond this kind of good manners. It's like honesty. You should make it clear to the actual client whose actual money it is, what it is you're trying to do. And even there, it's very tempting the instinct is to go towards the index, right? It's a lot of people don't want to hear, no, we're betting big and we could lose everything, because they'll get scared. So you need to communicate that you need to make sure that they buy into this investment thesis as well.
Yeah. I mean, back when I came across Bitcoin quite early as well, but for a number of reasons, I ignored it, and because I was too busy losing money on stocks. And but I say that, but like, the winners that I picked, they outperformed so dramatically. Like if I had have held on to them, like we're talking like a couple 100x, right, over the space of 7, 8 years, 10 years. It would have made my Bitcoin regret, significantly smaller. I mean, to be honest, I don't really have any real regrets given how things have turned out. And I don't really have any envy for people who had that conviction because they took the risk as well. So I'm very happy for people who did have that. And I'm always fascinated by how did you have a conviction for something so early on and widely mocked, widely ridiculed? And what was the background and the precursor that set your mindset up and your frame of reference that said, this could work?
Oh, so for me, I mean, I'm aware that almost everyone has a completely unique version of this story. For me, I've told my version of this a couple of times, and I'm always, if anything, kind of hesitant because I'm well aware of how lucky I am in terms of what the circumstances are. It almost feels kind of surreal in hindsight that I had so many helpful, nudges towards taking it seriously. So there was a handful of things. So at the time I discovered it, I mentioned before I was a student. I was studying math and philosophy, and both of those are obviously helpful in their own way. To be clear, I wasn't studying, in terms of the actual academic material, I wasn't studying cryptography or anything like that. But it's more just the instinct is helpful as a starting point. And I was also completely coincidentally, this isn't even really rooted in anything academic, I was pretty well read in Austrian economics at the time. That's all.
How did that happen? Because
how did that happen?
That's not mainstream economic theory, right? I mean, it's a school of thought. It's a well-established school of thought. But it's like, you need to seek that out.
Yes, you do, which is why I feel so lucky. So there is a bit more of an involved story there. So the way that happened is, when I was in high school, so this is going back even further. When I was in high school, I did economics, and the way it's taught in high school, at least in Scotland, which is where I grew up, is it's extremely rudimentary, right? You only even have the option of doing it in your final year. It's not something that you'd be taught as like a 10-year-old. It's like 101, but I guess even prior to 101, whatever you would call that. And they'll typically split it up as there'll just be the first half of the year basically will be micro, and then the second half will be macro. And micro is, I mean, even in general, but especially in this kind of overly simplified context, it's basically just like business. It's kind of business administration and common sense, effectively. There's not a huge amount more to it. But then when you get to macro, it's this like complete disconnect, and it just becomes all this Keynesian nonsense. And when I guess I was like 16, 17 when I was studying this. And this is my first exposure to economics at all. I knew that there was something wrong with this, but I couldn't really put my finger on why, right? It just, especially as like the contrast is quite funny in hindsight too, that micro just makes sense. It's almost defined as like stuff that makes sense in this context.
Well, it's the interaction we have in the marketplace, in the economy.
Yeah, you can't really argue with
there's an
any
intuition
of this.
there. Yeah.
But then the macro stuff is just like obviously does it. To me at least, it was obvious it didn't make sense, but I didn't have the education to articulate in any more detail why it didn't make sense. It just felt wrong. And then I told my dad about this, and he's very well read just in general, but he in particular was well read in Austrian economics, and he basically just laughed and then introduced me to Austrian economics, and he went and got a book off the shelf. I forget what book it even was. It was some Mises book or something. And then I started reading that in parallel to the nonsense they were teaching in the class. And then, I have to go and sit the exam and give all the fake answers so I get an A in it, right? But that was the introduction. So that was where the interest came from. And then after that, when I say I'm relatively well read, I hadn't by any stretch read everything. Even today, I haven't read like the entire canon of Austrian economics, but by that point, so this is now fast forwarding probably 4 years after that, I'd read the classics. I had like a good grasp of it. I could talk about it intelligently, and so that's obviously very helpful too. I think every Bitcoiner will have gone through that experience at some point. And then final few influences. When I was in university, I had started a business. I don't emphasize this too much because it wasn't a very good business. It's kind of beside the point that like I didn't really make any money off of it, but it was, not everyone has done that. So that having that experience and having that intuition is helpful as well. And then the final thing is the only what I would call real job, like adult job that I'd had at that point was as a software developer. And I obviously didn't pursue that. I really wasn't very good at that either. But again, it's similar to the studying math, studying philosophy. It's the intuitions that gives you were very helpful. So that was my background when I encountered Bitcoin, and it's incredibly lucky that it led me to take it seriously, basically.
And so when you first, which year was it when you first came?
So I honestly, I don't even remember the year because I remember.
Do you remember the price?
I remember no, I don't remember the price. I remember the setting because, so it was either 2013 or 2014. But I remember it by the academic year, not the calendar year. So I know like what year I was in uni and, where I lived and that kind of thing. But I don't remember exactly when this happened. And it's interesting you asking about the price though, because I didn't buy until quite a long time later because I had no money. So that was, which is a crucial point in it too. Like it's why my journey, it's a bit cringy, but my journey was quite a slow burn in the sense that there was probably 3-year gap or something between first discovering it, first starting to think about it in a much more academic context, trying to read what limited material there really wasn't a lot to read about it then. There was some good stuff, but there wasn't a lot. To then actually being in a position to buy it years later, which I mentioned this before. I kind of alluded to it in the TradFi context. But to make a bad comparison in TradFi, whereas in Bitcoin it is really, really important. Actually owning it yourself is like an important milestone on the the journey. So that happened way later. Yeah,
it's one of the reasons why I recommend you just give someone $5 or £5
I wish someone had done that to me. That would have been amazing.
Yeah, and then suddenly they think about it. It's on their phone, right? Like the easiest way is to just send £5 of Bitcoin to someone.
I still remember this. Like the first time I sent myself, I was probably sending off the exchange. Actually, now I think about it, first time I sent myself. Actually, no, sorry, it wouldn't have been sending off the exchange because that ruins the point. So I remember it was post sending off the exchange, but then also just sending to myself. I think I was like trying a new wallet or something like that, and I remember it hitting me like, okay, I'm just sitting here with like my phone and I just sent myself money and like, what's the big deal? Everyone's probably used to that with fiat, like with their bank account. They just like send it. No, you send it to yourself, I guess, but you send it to your friend or your parents or whatever. But it dawned on me like, wait a minute. First of all, I did this. Like I didn't ask a bank to do it. I did it. And also I sent it to myself, but like Bitcoin doesn't know that. So, I could have sent this to anybody, anywhere in the world. And that's powerful. Like I distinctly remember the experience of this sinking in. And that was really important. That wasn't something that, you can't explain that to someone. They need to actually do it. So I completely agree. Yeah. Just giving someone, even if it's, $5, $10, whatever, that's more valuable than probably quite a lot of purely conceptual explanation.
Well, I've seen the look on people's faces when they see the transaction going through and, usually like a big green tick that the money's or the Bitcoins hit their wallet. And just five minutes ago, they didn't have a wallet and they didn't have any Bitcoin. Now they've got some. And suddenly it occupies a bit of space in their mind. And I think that moves people a lot to just pay a little bit more attention to it. One of the reasons why I didn't buy Bitcoin much earlier was because of the user experience. And I just had a look when my friend was just having a bit of a play, and I had a look. I'm like, I'm not learning all that, right?
Yeah.
You know what I mean? It's like, and in addition to that, I had zero conviction about whether or not Bitcoin would survive. what made you think that Bitcoin would work, or was it a bet that it just could work?
Yeah, it's probably more just that it could work. I to be honest, I don't remember my thought process in enough detail to give a good answer there. In hindsight, it probably is relevant that I had such a big gap in that, when I first discovered it, I guess, okay, you could say, yes, I could have bought like $5 worth or whatever, but I'm not sure that other than maybe the behavioral component of then doing the self-custody and so on, that obviously would have been valuable, but financially, I don't think it really would have mattered. Like, I legitimately had no money at the time.
Yeah.
It took me getting, my first adult job to have enough disposable income to start taking it seriously from that angle. But I think that gap was probably useful in the sense that I never really had that worry. Like, by the time I could buy it, I was deeply convinced because it had been brewing for 3 or so years at that point. So maybe even that's actually kind of lucky because I don't, it's kind of a classic thing of people saying, oh, I could have bought it at this price. And then by the time I did buy it, it was 1,000 times higher or whatever, 100 times higher. I just never had that complete accident of history. I never had that. So I don't have that regret.
I got into Bitcoin initially purely as a trade, right? But within the first allocation, I just got this FOMO and I was all in within 6 weeks.
Right.
So you've known about Bitcoin for perhaps 2, 3, 4 years. You're finally working and earning, an adult salary, as you put it, right? And you're
real
like,
money.
Finally,
fake money, but real money.
I know, but finally you can actually get started in allocating. Did you get a sense of, I'm too late for this shit? Like, I got to hurry.
I don't think so. No, I don't. I mean, maybe it's possible at the time, but like, honestly, I just don't remember that much about the thought process. I was pretty calm about the whole thing. I'm pretty happy with how it worked out. You never had a sense of
urgency to get as much as you can?
There was. I do have one funny story about this. It's not really a direct answer to the question, though. It's more just like, you've reminded me of something funny that did happen. So in my early days of buying Bitcoin, it was very much tied to my bonus. So they paid out our bonuses at the same time every year. And I pretty quickly moved away from that because I realized the behavioral danger there, right? Like, I don't want to time the market, even inadvertently. So I just DCA'd ever since. But in the very early days, it was tied to my bonus. And I remember in 2017, so we get our bonuses at the end of March. And in 2017, that was the first time there was a lot of chatter about the Winklevoss ETF. I think there'd been some ETF stuff before that, but the Winklevoss one specifically, which had been they applied, like they made an actual application and had all the infrastructure set up and everything. And that was happening about that time. I was on a work trip in Japan, and I was there for quite a long time, I think 3 weeks maybe. And we got our bonus and I said, excellent, I'm buying Bitcoin. And then it wouldn't let me because it could tell I was in Japan. As I was like going into my bank to try to then send it to the exchange, right? And they're like, no, you can't do that. You're not in this country. And I was like, oh shit, I can't do this for another 3 weeks. But then in the meantime, there's all this news about like, oh, there might be an ETF approved any day now. And so I ended up in this weird position where I didn't even know that many Bitcoiners then. I wasn't on Twitter, but I knew some, and they were all, as you can imagine, like really excited about this. And I alone was like, please don't get approved. Please don't get approved. I need the price to stay low for another 2 or 3 weeks. And it didn't. So I was fine. Eventually I got home and I bought my Bitcoin, and it worked out well for me. So, but basically that was the only time I was very stressed about the price I was going to have to buy at.
I remember speaking to Stacey Herbert about her early conviction as well. And she's like, we went to a party and they were giving away Bitcoin in balloons that you had to pop or something. And she's like, and we were on our hands and knees, like, I can't believe they're just giving away Bitcoin. I'm like, hang on, like, imagine the conviction you have to have about the future to be picking up like what might have been like a few dollars or whatever. Because like if there was maybe a $5, I might be bothered to bend down and pick it up, right? Because it's just at that time it's just the same, unless you have a conviction about the future of Bitcoin and you're this is going to be worth a squillion in some time,
Yeah.
right? And you're like, yeah, then in that
Yeah.
case, I'll get on my hands and knees and pick it all
I
up.
think I wasn't early enough for that kind of thing to apply. And obviously, you read stories of like the faucet thing where you literally just, I forget exactly how it works.
For a survey or whatever it was. Yeah.
And again, even there, I feel quite lucky in terms of my specific circumstances and like what the behavioral components were. Just in that, like, I'm not saying this to boast, but I just think it's kind of true. Like I live quite frugally. I don't really I don't spend a lot of money on stuff I don't need. I guess I have probably one or two vices, but nothing too extreme. My attitude is always has always been, and probably even this helps with understanding Bitcoin in the first place, just that, you should save, right? It's like, and it's a cultural thing too. It's not just, I deduced that this is a good idea. It's just, this is what my family have done. This is the environment I grew up in. It's like instilled in you that you should save. And so I think that definitely helped in terms of me think this has kind of become a meme as well. And I think it's a very healthy meme. Like a lot of Bitcoin memes are kind of stupid, but this is a very behaviorally healthy meme of it's savings technology, right? It's not an investment. It's not like an asset class. I mean, there are senses in which it is that, but the healthiest way to think about it is that it's savings technology. And so my attitude to it was always just, this is how I'm going to save. Like, this is better than saving in pounds because pounds are government shitcoin.
Why do you think that's a more healthy approach to viewing an allocation to Bitcoin?
For a few reasons. I think it's more intellectually honest because if you invest in Bitcoin expecting to get fiat gains, like because you think it's going to go up faster than something else, and then you'll sell it and you'll have more dollars, I don't think there's any coherent investment rationale there. Like you can't believe in Bitcoin as superior money and want to be participating in its monetization if that's your attitude. I just don't think it makes sense. I think these are kind of contradictory intellectual attitudes. Like the only way that attitude does make sense is that you actually believe it's bullshit. Like you believe it's a bubble. You believe it's maybe a Ponzi even. You think that it will continue to go up, but only for a short period of time, and you can trade in and out of it effectively. Which, may be true, but I don't think you can think that and think that it's going to be money, or that it is money in some sense, and it's currently monetizing. So I think it's a more sound intellectual approach to basically first recognize that it is money and it is currently monetizing, and then have your acquisition strategy or your investment strategy derive from that. I think it's also better. I'm not sure how to phrase this exactly. I mean, I used the word healthier, and you picked up on that. I wanna touch on something that's like it's more psychologically safe in a way. Like you'll be, maybe this depends on your personality. Like this might actually be something that doesn't extrapolate that well beyond me, but you'll be a lot more comfortable with how it's kind of going for you, basically, because again, if you're used to denominating it in dollars rather than in Bitcoin, it's going to be insanely volatile, right? And you're gonna, if you think of it even as like your portfolio, right? But you're just looking at the dollar price of it, it's going to swing up and down like nothing else you can possibly invest in, and it's just not going to be pleasant. It's not going to feel. It's not going to give you a kind of a sense of long-term security that is ultimately the point of good money, right? That absent Bitcoin, this is again, I've said this a few times, it's more just a complaint about fiat, that this is a pretty core component of what fiat robs you of, is the ability to be secure in your future purchasing power. And so I just think, if your attitude is that you are saving, you're saving in a superior monetary technology, that gives you the grounding to not care so much what the dollar price is. And it's not, you can't, maybe you can, I don't know. It feels like you probably can't completely ignore the dollar price. That's not really what I'm advising. It's more, setting yourself up such that it doesn't impact you and it doesn't stress you, because the whole goal is to avoid stress, basically.
It's price action anxiety. If you're focused on that, it robs you of the financial peace of mind you have by taking a longer term view. And I mean, I joke that I hope to be around long enough to be able to say the price doesn't matter to me. But in fact, now as things are turning out, it doesn't really matter too much, because
I think it would be disingenuous to say it doesn't matter at all. But equally, I think the goal, the kind of the personal goal, not the goal in terms of like the whole ecosystem or whatever, but one's personal goal ought to be to have it matter as little as possible.
So I'll challenge that, because I think you can hold those two thoughts in your mind at the same time and act perfectly congruent with how you perceive Bitcoin as being a savings instrument, primarily as a savings instrument. And perhaps even up until, the way this cycle is playing out so far has been a little bit different to what we've been accustomed to in the previous 15, 16 years. But you can certainly have a core conviction that Bitcoin is savings technology, have a long-term view. But then we've had 3 very predictable bull runs, bear markets, through which you could have, we're not talking picking tops, but you could have sold much higher than you bought back, given the high level of volatility, through each cycle. And we could, there's a sound argument to be made. Cycles are over. We're now just in sort of a secular bull or bear and corrections and all the rest of that, just like regular price action. That remains to be seen. And there have certainly been many people in the space who probably would call themselves maxis who make commentary along those lines as well. So I'll throw that to you. What do you think about that?
So no, I don't disagree with that at all. I'm not saying that attitude is wrong or people who say these things are wrong. My suggestion is that you don't need to think about it that way. I guess there's 2 different interpretations. One will be a bit more controversial. You don't need to think about it that way. I think that's not controversial. That's just obviously true that you can have a different attitude. The more provocative position is you shouldn't think of it that way. Given you have the option not to think of it as effectively a security with a fiat price, I would advise you take that. That's my contribution.
I think the 2 terms I used was like financial peace of mind and then price action anxiety. Those 2, if you can gain one by alleviating the other, it's certainly something everyone should aspire to do. However, that is exceedingly difficult within the first 5 years of being in Bitcoin.
Oh, it's definitely.
Really
if you haven't been through a full cycle, it's painful, for sure.
Yeah. And so I guess my biggest accomplishment in the time that I've been in Bitcoin is not caring about the bear market.
Okay, but I think this links to my previous point, though, that, again, you don't have to do this, but if your goal is to alleviate price anxiety, then having the foundational attitude from which everything else follows being this is savings technology will make you much calmer about things, right? If you're only in your first cycle and you're down 80% or whatever, I mean, that's probably the worst that could possibly have happened to you, but I'm sure it happened to some people, right? If their attitude was, number go up, I'm going to sell at the top, I'm going to become rich in dollars, like that's a horrible position to be in. But if your attitude is, this is savings technology, I'm not going to spend this for 50 years, it's like kind of meh.
For the long term, I wholeheartedly agree with that. For the long term. For the short term, I think many of the pitfalls of holding fiat are way overplayed by Bitcoin. It's way overplayed.
Oh, definitely, yeah.
Like,
I don't disagree with that either.
It's like,
Well, this is an interesting angle too, though, right? So maybe this is exactly where the difference comes from. That I would argue, I've said this in this conversation before, but just in a different way. This is maybe a clearer way of putting it. That whether it's Bitcoin in practice or just good money in theory, one of the goals, if not, I'd argue probably the most important goal, is of taking it seriously and having it, of accumulating it, is to enable you to think more long term. Because if you're stuck with only terrible fiat money, the concepts kind of dissolve away. Like this is the tragedy of hyperinflation, that as much as you might intellectually understand the argument, you just can't, you need to eat, right? No one's time preference is zero. Yeah. You can't think long term. You as an individual can't think long term, but society starts to quite literally break down because nobody can make plans. They just get desperate and they get antisocial, and it's horrible. And so this, to me, is the ultimate promise of Bitcoin. Is it gives you back the ability to think long term. But again, you don't have to. So this is maybe kind of the distinction that, again, nobody's time preference is zero. So you can't only think long term, but the longer term you think, the less anxious you'll be about these things.
Yeah. And I want to touch on something. I guess I'll throw it over to you. How do you set yourself up beyond just your mindset and investment horizon personally to facilitate that?
I don't know if my answer is really going to be helpful to anyone. Like, I don't think it generalizes well. I also don't even think it's interesting, frankly. I touched on it before. It's just that I don't really spend that much money anyway. Like, which obviously that's not good advice. It's like, just stop spending money, right? It's almost like, it's like the boomer meme of like, why are you paying $10 for avocado on toast or whatever? I am in no way intending for this to be like financial guru or anything of that sort. But I think that probably the most honest answer to the way you asked the question is that I just don't really think about it that much at all. And if anything, that's exactly, or not exactly, but it's a very important part of what drew me to Bitcoin in the first place, and why I think I'm kind of behaviorally predisposed to appreciate it. I appreciate that's kind of a non-answer, so I'm sorry. Yeah. I'm sorry I can't give something that maybe is more helpful for people listening, but it's...
I was thinking more along the lines of personally, like there are certain memes in our space, like fiat mining, for example.
Right.
As a job. And I think I like it. I like how it sounds, because that's essentially what you're doing, and it implies it's all going straight into Bitcoin, and your entire purpose is to accumulate. I like that, but somewhere in there, it almost sounds like disparaging of work, and it's one of the things that I wanted to emphasize is that actually work is quite an honourable thing to participate in.
Or it's extremely honourable. Yeah. I agree. I maybe haven't come across it as much as you, because I don't think I would have independently raised this as a concern. I don't think I'd be interested if you maybe tease this out a bit more, because I'm not sure I've come across that interpretation of that meme that you shouldn't work. Maybe can you tease it out a bit?
People seem, there's this thing,
or is it just like space, you should aspire to retire, basically? Is that like what you're getting at?
I think in the broader crypto space, and it's not necessarily a shitcoinery thing either, right? So I broaden that context to say it also applies to the Bitcoin community, but it's much broader than that, probably society-wide more than crypto-wide. There is this thing that people feel relieving yourself of the necessity to work is the ultimate aim. But in aspiring to that, people are sort of develop an aversion to work, which I think is completely incorrect.
Yeah, I mean,
you don't
I'm
do
not,
one before the other. Like,
I'm not entirely familiar with that, but to the extent that this meme is out there,
it's the flex culture that comes about, right?
I agree.
If you flex everything
toxic,
and pretend you're faking it till you make it, all that sort of stuff, and it's like, hang on a second, like that's where you get to after perhaps a decade or two of accomplishment. Where you are right now, young man, right? And some of us are not that young, but wherever you are in your life, where you are right now from a financial perspective, if you need to work, that's perfectly acceptable. Work your ass off, kill yourself doing a job. Hopefully it's something you love. Hopefully it's something you're good at. But do that as well as you can until you get to a point where you're accomplished enough to afford yourself that freedom.
My take on that would be that it's unfortunate that this would get brought into a Bitcoin cultural context, because it's really it's kind of fundamentally a fiat meme. It's almost, I can understand why people would feel that way, almost as an immune response to what fiat forces on them, which is, I mean, there's a number of different ways you can interpret it depending on how, I guess, how deep you want to go in terms of like the structural problems caused by fiat that give rise to these kind of jobs in the first place. But there's an angle there. I think the simpler angle, though, is just the inability to save, right? It's really driven by the resentment of work comes from the feeling that it is both necessary and yet somehow pointless. It's like you don't have a choice to do it. You have to do it because you'll starve and die if you don't. And yet doing it doesn't achieve anything. You're still, it's like you're on the treadmill, you're on the fiat treadmill. This is a Bitcoin meme, right? Or is it the hamster wheel? I forget. Is it, you get what I mean, right? Like you can't get off it, right? It's like Sisyphean. Yeah. It's perfectly legitimate to relate to this and to be angry about it. I think it's unfortunate to carry that into the context of Bitcoin, though, because what Bitcoin there is kind of a proxy for gambling, effectively. So I think I maybe push back that I think there is a bit of a shitcoiny element to this, that because you can't get off the hamster wheel by working, you have to try to gamble your way out of it, or you have to try to, there's kind of a conflation of investment and gambling, right? You have to like hit it big on some, invest in NVIDIA 10 years ago or whatever, or invest in some AI thing. You were joking about this before. That's very much what shitcoins have tapped into, I think. I mean, I think of shitcoins as basically just being an extension of gambling. It's like a new delivery mechanism for feeding gambling addiction, which is not entirely, but is in large part caused by this, it's ultimately a syndrome of fiat. And I think it's unfortunate that it's probably unavoidable as well, but it's unfortunate that the promise of Bitcoin's monetization makes it slot into this very easily. And I would suggest, I think this ties with something I mentioned before, actually, that I would suggest a good way to inoculate yourself from this, assuming you want to, is to see Bitcoin as savings. Because for a number of reasons. I mean, one is, if you're clear about it being savings and you've thought seriously about what that means, you won't mistake it for an investment, because that's something else. These are, or at least should be, distinct concepts. Shitcoins are clearly not savings. They're not even really investments. They're just gambling. And I think that's also more cleanly addressing what the kind of culture of resentment around fiat work has destroyed in the first place, right? It's, again, exactly as you were saying, it's not that work is bad. Work is good. Work is fundamentally very, very good. It's that working without the ability to transform that into savings is bad. And so, obviously at this point, we're kind of contractually obliged to say Bitcoin fixes this, right? Yeah. But on a slightly more serious note, I would just note that it's unfortunate that Bitcoin can be kind of a proxy for the degenerate gambling that feels like a way out. All
of that's very well made points. And the thing that I want to highlight is, I saw a really interesting chart about the 4-year moving compounded annual rate of growth of Bitcoin. And I don't know whether it's because we haven't had a parabolic run, but it's been trending down for some time. And at the moment, it's kind of 20%, right? It's nothing to sneeze at, but it's far from the transformative, in a short period of time, rate of compounded growth that's going to be available. And that might change in the next 6 months. We get a massive parabolic rise. Everyone's happy, number goes back up, the compounded rate of growth goes back up. But it's leading to a lot of people looking for faster ways of accumulating wealth and taking on more risk. In the first instance, leverage within Bitcoin. Right. In the second instance, veering away from Bitcoin to some of the things that you mentioned, which is basically gambling, right? If you're going to shitcoin, fine, but just understand it's gambling, right? Do not fall for any of the narratives. This is the biggest problem I have with people who push this stuff. They push it as investment grade, right? Yeah. And they use terms like blue chip crypto, which is complete and utter horseshit, right? There's no such thing, right? There's no such thing as blue chip crypto.
It'd be funny if they called it blue chip shit coins. We've got our investment grade shit coins and our junk shit coins.
which sort of comes back down to the work aspect. Find work that's meaningful, that allows you to generate savings, and then store those savings in Bitcoin. It sort of comes full circle around the point that you mentioned about Bitcoin is savings and a healthy perspective towards actually allocating to Bitcoin without the price anxiety, with financial peace of mind as well. And so that's the reason why I guess we've put a nice bow on the conversation there. But that's essentially what I was trying to get at for people listening to this conversation is you do need to work, you need to generate excess capital in savings, and you need to store those savings in Bitcoin. The job is to make you not need to sell your Bitcoin to live. That's what it's for. And so long as you can pay your bills, live a decent lifestyle, let Bitcoin do its thing. You know, that's the sort of conversation that I have with people who are sort of thinking of getting out of work. I'm like, well, why? You're not financially independent yet. Right? You're no way near that. Just keep working, enjoy your life.
I'd go further than that, though. I mean, I think even if you are financially independent, I don't mean to judge anyone who doesn't work. I mean, it's a nice luxury to have. The point isn't really about judgment. It's more about wisdom, I guess, in some sense. That I would caution that the fantasy of not needing to work probably won't be all it's cracked up to be for most people. If they do achieve that position, they'll feel like there's something missing in their lives. And again, it's not to judge people who do it. It's more to say the people who do it are, presumably in what I would expect to be a minority of how they actually want to go about living their lives. And that's perfectly fine for them, but it's almost not a great role model. It's not something to healthily aspire to, because that probably won't apply to most people. And it goes back to the same point in terms of, I don't mean, drag us back into, talking about shitcoins or whatever, but it's that fantasy is appealing to, and in a way channels, effectively gambling as opposed to work, right? Like the goal is the goal of that approach, or what's kind of being sold is it's just obviously not savings, right? It's a means to escape something that ought to be quite rewarding and quite meaningful, and almost just kind of like win the lottery basically, and just buy your ticket out of it. Which I think this is not even a Bitcoin thing. This is like a meme in broader culture, right? That just normal people win the lottery and then their lives are ruined because they just like don't know what to do.
Well, correct me if I'm wrong, but I think work for a lot of people is a proxy for purpose. And in the absence of work, people lack the structure and purpose to give their life meaning. And they find it difficult with having an abundance of choices to actually pick something that gives them purpose, or even they don't even know where to begin, because work has always been something embedded in us that we need to do, right?
I think this is part of the tragedy of fiat in a sense. I alluded to this before, that you don't need to push it as far as hyperinflation, but it just, the inability to transform the work into savings robs you of the understanding of that meaning that it not that it should be necessarily, but that it could be giving to your life. And it makes you more short-termist and more selfish and more antisocial by necessity, and stops you recognizing that work is actually very pro-social. If you think about it, again, I'm not meaning for this to become too kind of intellectual, but if you think about why people are paid for work in the first place, it's because they're creating value for others, right? They're creating more value than they are taking. And that's what generates the ability to save in the first place. And this seems like, I feel like to me, maybe it's back to the whole, I'm wary of how this may not extrapolate beyond me or that far beyond me, because the instinct to save, for me at least, was very kind of culturally ingrained thing. Like all the things I'm saying right now seem completely obvious to me, and almost not, it's weird that you need to say them. I'm sure a lot of people are like that too, but it's just really sad that it's not completely universal, right? Like, I'm certain that what I'm saying is not understood by absolutely everybody, precisely because, and I don't mean that at all in like a pretentious way. If anything, it's exactly the opposite. It should be understood by everybody, but fiat robs them of the ability to understand this and creates this perception of work that is, I guess, unhealthy maybe, but really just tragic. I think that's what I started off saying, right? This is the tragedy of fiat, is that it robs you of a real understanding of this, of a healthy understanding of this.
Why do you think it's fiat that diminishes the ability of a worker to save and not the system itself?
What do you mean by the system itself? What distinguishes the two?
Take a more classic approach to labor versus capital. And I think well and truly, at least in Western societies in the last 40 years, capital has just been running rings around labor. And the dynamic at the bargaining table is well and truly tilted in favor of capital and a very small cohort of high-end workers.
This is maybe, I guess I should apologize if your audience isn't sufficiently steeped in Bitcoin dogma that to me this is the same thing. Like, this is
I don't see it as the same thing.
As in when I asked you to clarify what do you mean by fiat versus the system, like, to me fiat is the system, and I appreciate this is very kind of this is Bitcoin dogma, so people may not agree with this. So this dichotomy of where the power lies between labor and capital, even that is interesting, because I think a lot of people will reflexively oppose that framing as essentially Marxist. I wouldn't, for what it's worth. I think it's just accurate, but I think there's some missing pieces that obviously Marxists would, like actual Marxists, either aren't aware of, or if they are, they lie about it for the furthering of their political aims, which is that the main reason that currently the power is so tilted towards capital is because fiat is so out of control. Labor is almost by definition the furthest from the money printer. Capital is almost by definition the closest to it. I mean, in particular, and we don't need to go into too much detail on this if you don't want to, but the precise mechanism of money creation within fiat is effectively giving capital a zero cost of capital, and labor kind of an infinite. It depends exactly how you define it, but the most expensive costs, such that they are effectively priced out, right? There is no reason to expect that this power dynamic would exist really at all, but certainly to anywhere near this degree without the mechanism of fiat. And so that's what I mean when I say, like, I generally, to me, the system is fiat. I just use them interchangeably. I apologize if that's unhelpful.
No, that's fine.
This is kind of my shtick, is just whining about fiat all day long.
I think
that's why you have me on.
I think it makes for a really good conversation to flesh out, I guess, some of the nuances in that. Because when I alluded before to a small cohort of workers who are labor, actually doing really quite well under the fiat system. So I would suggest that while fiat printing is a huge component of what we're discussing, that diminished negotiating power is probably a larger component of that.
Yeah, but where do you think that comes from, though? I mean, I can give my argument and tell me if you think I'm missing anything. But this is kind of the key for me, that what I'm about to say, I think, is more or less exhaustive. And this is where I completely disagree with, I guess, again, a Marxist, right? If it was like a three-way debate here with an actual Marxist, and the starting point was we agree on the contemporary skew in political power towards capital and away from labor. Like, on the one hand, why, and on the other, then what? I think we disagree on almost all of that. For me, where this even comes from, and I don't see the point in really identifying anything else, is, I guess, two things. One I mentioned already, which is the money creation mechanism whereby capital has zero cost of capital. Maybe more importantly, certainly it's downstream of this, and I think the social consequences are much, much worse, is that even aside from this somewhat abstract concept of cost of capital, the inevitable consequence of the extremity of inflation And the inability to save, basically, is more what I mean rather than inflation per se, is the monetization of other asset classes. And I think the chain of events that leads us to where we are now is both, like, it's unavoidable, it's undeniable, and it's also more or less exhaustive in terms of describing the situation labor is in, which is that in particular, real estate is monetized. Obviously, lots of other things are monetized too, but the reason I'm focusing on real estate is whereas the average worker doesn't really care about like where the S&P is, it doesn't really affect them.
Or fine wine and arts and
exactly.
watches. Or
they may have very indirect exposure via their pension funds, say, but it doesn't really affect their day-to-day decision making. It completely prices them out of ever owning a home in a lot of cases. Like this is a meme well beyond Bitcoin. This is just like nobody can afford a home, which is really tragic for a couple of reasons. So one being that this is actually the more practical explanation of why they can't save rather than just these like abstractions of inflation and money printing and whatever else. It's that they're in a, quote unquote fiat job. They're fiat mining, but they need to put disproportionate amount of their income to covering rent because they have no choice, and the rent is inflated because it's satisfying the monetary premium of real estate rather than being priced on its utility, and so they have no disposable income. And this is basically what it means to be as far as possible from the money printer. They only pay for the inflated prices. They never benefit from them themselves, and that then becomes reflexive though, because by having no leftover savings, like by being unable to save, basically, they can't ever accumulate any capital either. So not only are all their expenses going towards housing, they will also never own a house, right? Never mind, something that you'd more classically describe as capital. They'll never be in a position to become an entrepreneur and, potentially actually benefit from creating wealth in a more kind of directly productive way rather than selling their labor. And so they're by this mechanism, they are trapped in only ever selling their labor and only ever buying things that they need and that are monetized. And that, I think, is, again, I've said this a couple of times, but just to really emphasize it, I think that's an exhaustive explanation of the phenomenon that you set up as a discussion point. I don't think you need anything. I don't think you need anything else. I think if you understand fiat, you understand this problem.
Perhaps you can call it cherry picking, but a starting point will be what the fuck happened in 1971, right? Let's just say that, fiat printing went into overdrive since then. Mm-hmm. We also had significant inflation during the period from in the 1970s, early to mid 80s, before we hit upon perhaps the mid-90s, before we saw the great moderation as a result of China's rise, industrialization that had a deflationary effect on the world economy. In the 70s and 80s, workers were able to save, despite what the fuck happened in 1971. Yep. But something happened from the 2000s onwards that stopped them from being able to save. What do you think that was?
Honestly, don't know. I don't have a particular theory on this. Do you have a theory on it?
I suspect that reduced bargaining power. Mm-hmm. Two things we saw in deindustrialization. Let's just talk in an American context because it's easy for everyone to understand. Deindustrialization, reduced demand for labor, and diminished labor membership as well. Mm-hmm. Probably a combination of those two. A third thing, I'd probably say that liberalization of labor laws as well. People became a lot more flexible, part-time casual work as well, made more people price takers, further undermining their ability to bargain in the workplace. And so you're being crushed at the top end, and then the inability to save. Let's just say that there was a progressive diminishing ability to save, meant that fewer and fewer people were able to buy a house. So then they became price takers in the rental market as well. Right. And so that's, I think those two, the top line and your biggest line expense are pretty much crushing everybody.
I would push back on this a little bit. Not to disagree with the facts in large part because I don't consider myself remotely an expert on, I would class this as like some element at least of geopolitics, let's say. and kind of longer term macroeconomic, which I'm not saying sarcastically, I mean like actual macroeconomic trends. I am not an expert in that. I'm also frankly not all that interested in it because it's as I'm sure is coming across, it's the theory behind, I guess the what would you call it, the mechanics of the financial system that interests me more, and I think determines a lot of what you're talking about. Not exclusively, but it's I think you can't afford to leave it out. So the reason I push back a little bit is that I think that the way you described what you just described is kind of unfortunately Keynesian or has a Keynesian lean.
Which aspects of
it? In the sense of you describing everything in terms of aggregates that the individuals involved can't really affect or respond to. So again, I'm not saying that these facts are wrong. I'm saying that I dislike the interpretation, and I'll offer what I think is better. You might disagree, but this is what I think is a better interpretation. That the idea of I get a little to be clear, not with you, because this is very much kind of emanating from just like fiat Keynesian, economists and academia and the media and whatever else. And the idea that labor, first of all, exists as a block and sort of does things collectively, and that there is a price for it. I get why you would think that way, but I think it stems from only observing and not understanding. And so why I think that's relevant is that the demand for labor as opposed to its supply always originates with entrepreneurship and ultimately with some or other form of capital allocation. We kind of alluded to this a minute or two ago in talking about like the value of work in the first place, right? Like work is pro-social because you're doing something that somebody else values, right? And that's why it's, in a very individual context, you should consider it good. At more of a macro level, though, you can't talk about the conditions of labor or employment or unemployment or whatever as if it exists in a vacuum. It exists entirely as a product of the conditions of allocating capital, and that maybe lends itself to suspecting part of the contribution of like the skew of power towards capital as opposed to labor. I guess I'm kind of open to that, but my point is more that this is just unavoidable. Like you shouldn't fail to understand this and just look at, and actually I can throw in one thing here that you might find kind of amusing. I have this massive pet peeve that I have no hope of anybody ever getting on board with this, by the way. It's more just like I'm in my ivory tower or my Twitter tower or whatever. I can be snarky about this. I hate unemployment as a metric because unemployment is not interesting. Unemployment is the default state. Employment is interesting. And okay, yes, it's just like one minus the other. Mathematically, it makes no difference. But I think in terms of it's massively behaviorally different in terms of thinking about what the number means, right? And I think it ties into the same point that if you think there are just, not you, but one thinks there are just kind of default conditions for labor, and labor is a block and it does this and it does that, you would tend towards like, okay, well, why doesn't everybody have a job? And, what is the unemployment rate? Whereas if you recognize that there needs to be capital productively deployed that is the product of which becomes even more valuable by the input of labor, you start to think instead, okay, well, why do people have jobs? And what are the conditions that lead to jobs even existing, and good jobs as well? And that's maybe leaning more in towards the political angle. So with all of that out of the way, I don't think you can really talk about the conditions of labor in a kind of a macro sense without recognizing what are the financial conditions that are either incentivizing or disincentivizing the entrepreneurship that is necessary to create these jobs. And so right back to where you started with the kind of macroeconomic trends, I would suggest there's a very heavy component. And again, I agree, it's probably helpful just to keep it in a US context, that from 1971 onwards, there was an increasing, what's the best way to even put this? Like a push to misprice capital such that entrepreneurship becomes more difficult in and of itself, but also more skewed towards finance. So almost every industry increasingly has some element of financialization, and that massively dictates what kind of jobs there are. And only downstream of all of this can you start to talk about, the conditions of labor. But by the time you're there, we're in the previous talking point, right? Which is, well, your housing is monetized, among many, many other things. So not to deny that, for example, China entering the WTO, like that's something that people commonly point to. Like labor law legalization and different trends around, gig economy and whatever. Like there's all these kind of talking points you can throw in. Not to deny that they are important, but I think they are significantly less important than, I guess, to be a bit rhetorical about it, like the financialization of everything, which has clearly happened in the US since 1971. I think that's by far and away the driving factor not driving, because obviously that's not directly connected to like China or, the technological factors that enable the gig economy. It's more that you can talk about the financialization on its own, but I don't think you can talk about anything else without mentioning financialization because of its impact. Because you can't avoid it. Like you can't decide not to interact with
issue,
money.
Right? You can't. I don't think you can pull out any string and just say only that lever was pulled and that's entirely responsible. You can say it drove a lot of other factors as well.
Yeah, I think maybe a clean way of putting this is what I'm calling the financial mechanics are not sufficient as an explanation, but they are necessary. You can't talk about some other factor and not mention them because you quite literally won't understand it.
Sure. And just to go back to the point that I was making, like I don't present labor as a monolith, but whether you want to, do the analysis by median, quartile, quintile, whatever you want to do, clearly much worse off than the 80s, 70s. Yep. You want to look at affordability metrics. You want to look at as a percentage of,
Well, I think because these things take time,
or
right?
anything.
Like the process of financialization takes time. It's not a great, it's a pretty clumsy explanation, but I think it's directionally correct.
So you think that compounds over the decades?
I think you wouldn't, the state that we're in now, I don't think there's no alternative scenario in which we end up there by like 1973.
So financialization of assets, I entirely agree with you. That compounds, right? How do you explain income disparity then?
Because more and more, and it's helpful just to keep it US centric, more and more of the total income from which labor is going to be getting one share is skewed towards gains from asset appreciation rather than real productivity, because that's what the incentives are increasingly driven towards. And that's basically what I mean. That's like another interpretation of every industry becomes financialized. Everyone tries to become a rent seeker rather than actually contribute something productive. And if enough people do this, it becomes self-fulfilling, because when you're a rent seeker, you're seeking rent from someone else.
Yeah.
So this is like a very abstract framing of the same point that I think is helpful. We already went through this in kind of a more tangible sense of like workers go to their fiat mining job to just about cover their rent because housing is monetized. And again, I don't mean to disproportionately, well, no, I kind of do mean to disproportionately focus on housing just because it's something that absolutely everybody can relate to. But I think
it's the biggest line item expense in everyone's budget, right?
But I think that, what's even more insidious though is that this actually affects everything. It doesn't just affect housing. It's just like housing is the easiest, I think, to understand, but it affects everything. It's not
so
good.
Let's reverse engineer this thing then, right? Okay, we're going to say, financialization is the root of all the evils, right?
Yep.
Let's say that.
That is my shtick, right?
So let's reverse engineer this and say, no more money printing from now on.
Yep.
Right?
That's tricky.
How do we, let's just say we do it. Let's just say we do it. Okay? We wave a magic wand. I could even say, let's say we're on a Bitcoin standard. Maybe
that's better,
that would
right?
pique your interest a little bit more.
The difference is really worthwhile, right? So if the scenario is we're on a Bitcoin standard, then it's much easier to be like, great, everything's amazing. It's paradise from now on.
Okay.
You
How do we unwind this?
You can't stop money print. This is why it's so bad. This is why we get from 1971 to now, and why it just only ever gets worse. If you stop money printing, everything implodes.
Okay.
So it will never stop.
Okay. Humor me.
Okay.
Allow me this indulgence and just say money printing stopped, and for the sake of this discussion, we can say magically we're instantly on a Bitcoin standard.
Okay, that's
so that
better.
you may believe the money printing has stopped. Okay. Explain to me how you would imagine the unwinding of what we've been through since 1971.
Sure. Yeah. I mean, I don't think it's much more complicated than. It's like it's easier to describe it in the negative, which is why it's helpful you're asking me about it unwinding. It's just everything bad that's happened like stops happening. It goes into reverse. Parker Lewis has a very good essay on this, which I believe is called The Great Definancialization. It might be Bitcoin and the Great Definancialization. I would encourage people to go read that, because what I will now say is just my poorly remembered retelling of the same argument. Basically, what happens is that no asset classes are monetized anymore, which means everything is priced for its actual utility and not its ersatz store of value component, given the money is broken and people need to save elsewhere.
Does that imply we have a housing market crash?
Good question. I mean, I think necessarily, but also you said we've already hyper Bitcoinized, so we're not. I'm not tracing fiat collapsing.
We're drawing a line, and we're just waking up suddenly. I know
think,
it won't happen that way.
I think yes, but even there, you kind of need to alter your perspective, because the idea of a housing market crash in a fiat context is terrifying, because people perceive so much of their wealth as being stored in their house. There shouldn't be such a thing. Prices going down should be good, right? This is a classic Bitcoin meme that the fiat economists don't understand.
Perhaps to be fair, we should have just taken a bit of a preamble to describe how we got to the point of no more money printing before the money. No, you want to just go? Let's go.
We're on a Bitcoin side.
I feel like we're being
because honestly, like my answer. Maybe you can ask other people this for sure. Or if you have an answer, that'd be great. But my answer would be, I have no idea. Like I honestly just have no clue how this is going to work.
I think I do have an idea, because like by drawing a line as I did, perhaps might be a little bit more sensational, and we'll get some more views and clicks as well. But it's not really a realistic way of what would happen. So hyper Bitcoinization is going to happen over a long stretch of time. In that period of time, we're going to see demonetization in a gradual sense, perhaps not in such a rapid and sudden way where house prices fall, but we may see a plateauing of various financialized assets over a period of time. So perhaps setting the groundwork to then my question, which I should have prepared a bit earlier, like this.
Sure.
And so now after that period of preparation.
So with housing, right? Yeah. Like, yes, there will be, it depends how fast it happens, I guess. So maybe you don't end up describing it as a crash per se. But if you want to compare that to, I mean, basically any good, because housing is a good, right? You consume it. It happens to last for a very long time. So it has some resale value, but in a sane world, it wouldn't be an investment. If you compare to any other kind of good that you consume, all this terminology just sounds silly, right? So if you think about, like, I'm not even sure what, like, television, say, or like phones or something like that, or maybe if you want to be really kind of nerdy about it, some or other component of Moore's law, right? Like some metric of processing power or storage or something. Has there been a crash in the television market? Like, what does that even mean? It just means prices are going down because we're accumulating capital. It's a good thing, right? So this is kind of the most important, I think, again, almost behavioral thing to get out the way, that yes, maybe there's a crash from a fiat perspective, but not in the sense that there has been historically. So what would happen here would be very different to like 2008, for example. So 2008 is, in very broad strokes, is a credit bubble bursting where the credit had gone primarily into housing, right? What we're talking about here is housing's demonetization. It just loses its monetary premium. It becomes, some people will lose a lot of, not even money really, but perception of wealth because they had been forced to perceive this as how they were storing their wealth. But I frankly don't have a lot of sympathy for that, because you shouldn't do that, right? I don't mean it's like immoral or anything. It's just the entire situation is immoral, even if the personal decisions aren't necessarily immoral. The obvious consequence, back to one of the previous points we were talking about, is that regular people can afford housing, which is just obviously a good thing. I don't see how you can possibly argue with that. Like, oh no, the poor landlords or whatever. Not that I want to go on a, again, it's verging into Marxist tirades against landlords. I have nothing against landlords, but I have a lot against a fiat-induced nightmare of nobody being able to afford to live. Like, I think this is just so obviously good that this unwinds. So that's thing number one, is that asset classes that have monetized, demonetize. And again, I think the easiest one to relate to is housing, but there's implications beyond that as well. Probably the next most important point, although it will be a lot subtler. I'm not sure it's something that most people will kind of obviously recognize in the way that they would recognize their rent coming down, say, is the implication of the proper pricing of capital. So this is what I was getting at in the previous answer, that the more skewed toward, like, financialization is self-fulfilling, and that the more rewards there are on offer for being closer to the money printer, the more capital will be allocated to businesses that are basically just skimming that flow rather than actually creating anything productive. So again, that also goes into reverse. There is no essentially political reward for starting a business, the point of which is to be close to the money spigot. The prices will levelize such that you are appropriately disincentivized to do that, because it's not actually creating any value, and appropriately incentivized to do literally whatever is creating value, which then in turn feeds through to labor being in a much healthier position, because their contribution will be priced fairly, I suppose, or accurately even in the first place. The extent to which you are able to provide value to your employer will be recognized on the basis of the value the employer is creating for society as a whole, not how close they are to the money spigot. And that will obviously be better too.
Okay, how does a barista get paid more under a Bitcoin standard than they do now?
So this is the tricky part. I'm not sure that a barista gets paid more. They might get paid marginally more on the basis that coffee chains will have a relatively lower cost of capital. So, or coffee chains that, I don't even know how a coffee chain would financialize itself. Although I'm sure it does happen. This is a tricky thing, right?
Real estate again.
Probably real estate would be a component.
McDonald's model, right?
Yeah.
So
coffee chain. I mean, maybe ignore the exact details of how it's happening. If you just believe it's happening to some extent, coffee chains their employer will have a level playing field relative to all these financialized businesses, and they won't need to be financialized themselves to generate greater returns that are in line with the value they're actually providing to their customers in the first place. And hence the labor that they're employing will have more bargaining power just by definition, because there's more wealth being generated to be shared there. So that's one way. I'm scared. I don't want to oversell that though, because I don't think that's the most important way at all. I think the far more important part is that everything the barista buys will be cheaper. And will get cheaper forever, right? Meaning that they can actually save. So this is right back to the first thing we talked about before we got into all the financial mechanics. Basically, none of those circumstances will exist. They'll be, or they'll be materially different enough that they will afford the barista or whoever the worker is to have a much healthier attitude about work, right? They'll be working in order to save, and they'll be able to afford things that they need to purchase, have capital left over, think long term, be more pro-social, and then ideally, eventually, actually own capital themselves. That's a really interesting angle. I kind of wish we'd mentioned this before, but this is a good avenue to kind of sneak it in. That to me, the saddest thing about that kind of dichotomy of like, who has the power? Is it labor or is it capital? I think the key reason that I mentioned this a couple of times too, is that this person doesn't actually exist, but I'm imagining there's like a Marxist here, right, who I'm arguing against. The key thing that I would disagree with them about is kind of like objecting to the question, almost, in the sense of insisting that these are discrete groups of people rather than roles. I think in a healthy society, and to be clear, there's like, I'm sympathetic to, there's not just a single thread, right? There's like political components to this, there's social components, but there is my whole shtick is that there's necessarily, unavoidably, a financial component to this. And when you kind of fix the money, fix the world, right? We have to say that too. When you fix the money, you're in a much healthier position for people to choose which of these they want to be. So they can choose to become capitalists because they have saved enough capital. They have, sound money actually enables this function. But they don't have to if they don't want to. Maybe they just end up spending it all. It's they have significantly more freedom. And actually, even this is maybe less widely popularized, but it touches on what we've mentioned. They can choose to become labor for basically the same reason, right? Like, for some time, probably you do have to work, but you can get to a point where you don't have to, if that is what you want. So it's ultimately just that people have more freedom. Frankly, they have more optionality as a function, by and large, of being able to think long term. I think that it's really all downstream of that. That if you're forced to think extremely short term, you just don't have these options, and that's unfortunately the position I think a lot of people find themselves in today.